Good morning, everyone. My name is Herc from Wyk. I'm from Pembani-Infrastructure Managers. It's a relatively new venture. We manage the Pembani-Infrastructure Fund, which is an equity investment fund in Africa. The two names behind us are Pembani, first of all, championed by an individual called Phuthuma Nhleko. Phuthuma used to be the group CEO of MTN, and he took it from a South African cell phone company, mobile phone company, into Africa, expanded into especially Nigeria, and it's now the largest mobile phone company subscriber-wise in Africa. So he's had a lot of experience of opening up markets in Africa. Phuthuma teamed up with another individual well-known in business circles called Johan Rupert. Johan Rupert is the main shareholder or key shareholder and the chairman of three very large entities. One of them is in the luxury goods area called Richemont, which owns the brands of Montblanc, Cartier, etc. He's also got a European investment company called Reinet, and then predominantly a South African investment company called Remgro. Remgro is a top 40 listed entity. It's been around for the last 65 years in Southern Africa. And the beauty of having those sponsors behind you is essentially your deal flow and the corporate memory and corporate knowledge of transactions behind you. I'll dwell a bit in terms of our strategy, and that might give you a feeling of how we see the market and the risks on infrastructure in Africa. Our view is that a lot of the investment opportunity not only lies in the greenfield transactions, the stuff that Andrew would generally get involved in, but also in companies around infrastructure. And that's the stuff that Carlyle would also generally do. So our view is a mix of the traditional infrastructure plus your PE fund approach. That would expand to companies in the services around infrastructure, companies involved in infrastructure. And your definition of infrastructure, we've broadened out to be agri-infrastructure, really moving product from one area to the other in Africa. We believe that the definition of infrastructure often becomes a constraining factor and should not. One should invest in where you open up markets in the continent. Andrew has very eloquently set out these 7 rules for developers. There's only one that I really wish to add, and that is choose your partners exceptionally well, especially your local partners. Be very wary of their political connections. They should be politically astute, but not politically connected. That is our view. We've invested in 2 entities so far, and it gives you also a view of the kind of stuff that we're doing, which is not really always your standard infrastructure. The one is what Carlyle referred to before, which is the Export Trading Group, which is agri, logistics, and infrastructure. It's really taking products from the farm gate to the export markets and then to process that as well. The second one is a rail leasing company. Again, we've seen an opportunity in a massive shortage of rolling stock throughout sub-Saharan Africa. So we've set up, with the help of the old Babcock and Brown guys in Europe, a rail leasing company, mainly for freight purposes. Our fund is in the early stages. We've had 75 million of seed capital from our initial investors. And we're hitting the road now. And it's very interesting to get the feedback from potential investors, the perception of how these guys see things from Europe, from America. Points that always come up, and probably repeating some points as well. First and foremost, liquidity. And that's something we really need to think about and grapple with. You can give all the possible solutions, but maybe we should start thinking about listing entities involved in infrastructure as well. But that is in the longer run once you've got a pipeline. Government interference is first and foremost at people's minds. How will you mitigate that risk? How will you ensure that you don't have these massive lead times that we've had? We compared notes a bit earlier. Some of us have been involved in developing transactions which still haven't happened, and we've been involved for about 12 years now. And you just simply can't afford that, not with the need that Africa has. Currency risk is always an issue, always a problem. And then your lead times, as I mentioned before.
Doing business in Africa, you can't afford to be without Africa Investor.